Hello, my name is Ariff and I am an analyst at Golden Brokers Limited. Today, we will be discussing the performance of Activision Blizzard, a leading American video game company known for popular franchises such as Call of Duty, World of Warcraft, and Overwatch. We will examine the attractiveness of the stock, the growth drivers, technical analysis, and the company's future plan. First, let's take a look at the history of Activision Blizzard. The company was founded in 1979 as a third-party game developer for the Atari video computer system and is headquartered in Santa Monica, California after an acquisition in 1991 led by Bobby Kotick, the current CEO. In 2008, Activision merged with Vivendi Games and renamed itself to what it is known today. Since then, it operates through two segments, Activision and Blizzard, and has a diverse revenue stream with a focus on both digital and physical sales. In addition to its in-house development teams, Activision Blizzard also partners with external studios to create new content for the PC, console, and mobile gaming market. Over the years, Activision have made several acquisitions, including King Digital Entertainment, the maker of Candy Crush, which contributed to the biggest segment revenue last quarter. It is one of their most profitable investments after joining the S&P 500 on August 2015 and later Fortune 500 in 2017. In 2021, it is estimated that the net value of the company reaches 80.45 billion at its peak and now have subsided to around 60 billion. Now, let's move on to the performance of Activision Blizzard. In 2022, the company's stock outperformed the US entertainment industry by 62.4% and the overall US market by 34.5%, returning 15.06%. The stock noted significant downfall in 2021 when the company was accused of shelter management misconduct toward its workers and CEOs agrees to a 50% pay cut due to the issues. The stock also suffers along with the whole market in 2018. In 2019 and 2020, the pandemic hits and digital entertainment soars, pushing the stock 83% higher. This strong performance suggests that the company's stock is in demand among investors. In addition, the stock has been less volatile than 75% of US stock over the past 3 months, indicating relative stability. However, the company's PE ratio of 35.5 is relatively high compared to the industry average, which may raise concern about the stock being overvalued and the market might already price in the acquisition by Microsoft. Activision Blizzard recently released its Q3 2022 earnings report. According to the report, the company net revenue for Q3 2022 were 1.78 billion, a decrease from the 2.07 billion in net revenues reported in Q3 2021. Despite this decrease, the company's GAAP operating margin for Q3 2022 was 27% and its GAAP earnings per diluted share were 0.55 per share. On a non-GAAP basis, the company's operating margin was 34% and its earnings per diluted shares were 68 cents per share. Bobby Kotick, CEO of Activision Blizzard, stated that the company is committed to supporting and developing its talent and will continue to release epic entertainment as part of Microsoft. In terms of financial performance, it appears that Activision Blizzard had a decent quarter with relatively stable operating margins and earnings per diluted shares. However, the decrease in net revenue compared to the previous year is a concerning trend, and the company may need to address in the future. The outlook for next quarter report on February the 2nd seems promising after incredible product launch records. Activision Blizzard is a force to be reckoned with in the gaming industry. Not only have they consistently seen financial growth in recent years with rising net income, total asset and profit margins, but they have also managed to decrease their debt relative to their assets. The strong financial performance is expected to continue with the release of their financial year 2022 report on February 2nd, 2023. However, their acquisition of Microsoft could be impacted by the outcome of an FTC antitrust case with the pre-trial set for January 3rd. Despite facing competition from other companies in the industry and having a relatively high PE ratio, Activision Blizzard has a strong portfolio of well-known franchises and a gross margin of 71.83%. They are also financially healthy with short-term assets that are more than 5 times what they need to cover their liabilities. In the past few years, we've seen Activision Blizzard net income steadily increase with a significant jump from 2019 to 2020. Their total assets have also been steadily increasing, reaching over 25 million in 2020. From a technical analysis perspective, Activision Blizzard stock has been in an uptrend over the past month, with majority of moving average on the daily shows a buying indicator as the price is above average in multiple periods. The stock has also been trading above RSI and MACD, showing that the trend is strong with small chances of pullback, even though stock RSI has shown the stock to be overbought. Low volatility shown by ATR indicators ensure that there is no drastic price movement. If the price continues to move in its channel, it is expected to close near $80 in the second month of the year. So, is Activision a good buy? In terms of growth drivers, Activision has several potential sources of growth. One is the increasing popularity of esports, which the company has a strong presence in through its acquisition of Major League Gaming. Another is the potential for further acquisition, as the company has a history of acquiring smaller studios and franchises to expand its portfolio. The company's partnership with external studios also allows for the development of new content and potential new franchises. Berkshire Hathaway, the holding company of the legendary investor Warren Buffett, is betting big on video game company Activision Blizzard. The company has increased its stake in Activision throughout 2022, and if rumors of a Microsoft acquisition go through, Berkshire's current 5.1 billion stake will be worth 6.4 billion. But even if acquisition doesn't happen, Activision shares could still be a smart investment, as the share price is currently 28% below its peak, and Buffett invested even before the Microsoft deal was announced. The confidence is further amplified when Senator Tommy Tuberville himself recently invested $250,000 in the company. Call of Duty Modern Warfare 2, Activision's latest release, has been a huge success since its October 28, 2022 launch. The game made over $800 million in retail sales in its first 3 days and became the biggest launch in the PlayStation Store to date. The subsequent release of Call of Duty Warzone 2 on November 16th has also garnered success with over 25 million players in just 5 days following the release. Activision's latest game have both lived up to a high expectation of fans and will likely continue to be popular choices for players. Looking to the future, Activision Blizzard has announced plans to release the next full premium release in the Call of Duty series in 2023, despite previous reports that the company was considering delays the annual release or changing its release schedule. The company has also expressed plans to continue expanding the Call of Duty franchise with additional free-to-play experiences as well as the most robust live operations to date. However, Activision Blizzard has also cautioned that it may not be able to negotiate a new licensing agreement for several of its games in China, which contributed approximately 3% of its consolidated net revenue in 2021. The acquisition of Activision Blizzard by Microsoft is still in progress, with an expected closing date in Microsoft's 2023 fiscal year. In conclusion, Activision Blizzard is a leading American video game company with a diverse revenue stream and a strong history of quality product launches. Its stock has outperformed the US entertainment industry and overall US market, returning 15.06% in 2002. While the company saw a decrease in net revenues in Q2 2022 compared to the previous year, it had stable operating margins and earnings per diluted share. Fundamental analysis suggests that the company has a strong financial performance and is expected to see continued growth in the future, especially with the acquisition by Microsoft. However, the high PE ratio and the recent accusation of management misconduct may be cause for concern among some investors. Despite these potential challenges, the outlook for the company next quarter reports appear promising due to the success of recent product launches. Thank you for watching. That's all from me.